Now we're staying with earnings and putting the spotlight on KEI Industries, and it's been a good quarter for KEI, especially their wires and cables business, because overall revenue is up, in the 20s. But if you look at the wires and cables part of their business, then that has surged 32%. Margins are in line with street estimates, though, there's a little bit of a pressure that's coming over there. So let's discuss all of this and more with Mr. Gupta, who's with us now. Sir, great to have you back on. And another solid quarter. We're just discussing this with our market guests that I think wires and cables at least is one segment where the market keeps getting growth. And you've done so well, right? You're best in class, 32% growth. Now, just tell us, what does this reflect? How does this reflect on your full year projections? Because your first quarter has been so solid. Would you like to increase your full year guidance, overall revenue guidance, or maybe the wire and cables guidance?
Yeah, good morning. We will still be very cautious. I think we will continue with our guidance of 18 to 20%, although we will definitely try to aim better. The first quarter has been extremely good. We have grown our export of wires and cables by 122% compared to last year. It is the actual growth is 61%, but it is due to decline in the export of EPC project, which was there last year, but now it is not there. But the wire and cable growth is substantial.
On EPC, can you just tell us, that business has been weak. So the revenue is down 56%. EPC margins also under a bit of pressure. So what's happening there? Can you just specify and give us some numerical guidance as well on if it picks up in Q2, Q3?
No, the EPC business we are consciously bringing down. We are not taking new projects. And our aim is to limit it to maximum 3 to 4% of our total sales. So this has been a conscious decision 4 years, taken back 4 years back. And we are consciously closing the contracts and bringing down the business as we are not taking new orders.
And by when will you get to that? This reorganization or this shift in focus, more on wire and cables. By when will you reduce EPC to 4%? So this whole exercise will be complete, just so that we know.
We have already reduced it to that level. So we want to keep it maximum within to 4 to 500 crore level a year.
Okay.
Mr. Gupta, you continue to beat what you say you will do. Good morning. 18 to 20% though revenue growth is maintained, but 25% growth this quarter. So, and you're saying you're confident of maintaining growth rates. The big, at a high level, the concern broadly for the sector is the simple question: have margins in the wire and cable segment peaked? Will there be pricing pressure because what new competition is doing in terms of setting up capacity over the next, it's already underway and will go on over the next 2 or 3 years. And that's a lot of new capacity, some 75 to 80,000 crores being put in. Will that cap what margins you can make in wires and cables and have margins which are healthy? Have they peaked here?
Prashant, first of all, I think from where this figure of 75,000 crore capex comes, I don't know, because that much of capex has not been planned, even in totality by most all the companies. Secondly, the whatever capex will come, maybe 8 to 10,000 crore in next 2 3 years. Market is also growing, and I think there will be enough room. I think we will be seeing more growth in this business because government capex is growing, and I think private capex will also come up strongly. So there will be enough room for the growth for everyone. Our focus will remain on domestic market as well as export market. I continue to maintain my guidance that we want to take our export to 20% of our total sales within next 2 to 3 years as our new capacities comes on board, which is coming up by mid of this year and then by the next year.
So you say revenues will grow. There is absolutely no doubt. The market itself is growing. So it will get absorbed. All this will get absorbed. But even on margins, you're saying, there's no reason to imagine that there is a cap.
No, I don't think. And I think we have given a guidance of around 11% EBITDA margins. We'll definitely try to improve it by 0.5% to 1% as our economies of scale comes up, new capacities comes up. we are more established in Western markets. So we will definitely aim to grow the margins. But as of now, I will still maintain a EBITDA of 11%, for next 2 years.
All right. Hi, Mr. Gupta. Good morning. And the numbers look fairly okay. The wires and cables business, if I compare you with your peers, whether it's with Polycab or with Havells as well, in revenue terms, you have actually outgrown them. Margins are relatively lower. My question to you is, are you outpacing industry growth and have you gained market share in the wires and cables business?
I think you must have seen that our export of wire and cables has grown by 122%. It is more than doubled compared to last quarter. That is the reason that we have outgrown the industry peers in our revenue.
All right. So in the domestic market, actually, your market share will be more or less stagnant. Is that correct?
Yes.
All right. Do you have a number handy as per your calculations?
No, I don't have immediately handy numbers.
Okay. All right. Could you tell us, going ahead, what kind of a capex outlook are you looking to put out at current utilization levels? What is it? And give us a sense about how you plan on adding capacity.
This year, we expect to spend around 900 to 1,000 crore capex in our Sanand plant. And the next year, again, this capex can be 600 to 700 crore. Because we by the time we complete the project, we will be also doing another capex in the other lands which we have acquired. And it may be for the increase in the capacities of existing products or for some backward integration as well.
Mr. Gupta, I just want to come back to that margin point. And interesting to note that you're sticking to your guidance of touching the 11% EBITDA margin mark this year. And that'll be interesting because the last couple of years, the margin has been hovering between 10, 10.5. I think the last it was above 11% was around FY21. So just give us some more color. What is the kind of price hike that you will plan to take, if any? I think there was one taken towards the end of the previous quarter. Will there be need for more price hikes? And also, since you're going to grow your export business to 20%, how do the margins compare between the domestic business here and your exports?
In exports, the margins are slightly better. That is why I say that we will be able to improve our margins. Secondly, as we start our Sanand plant, we will have some improvement in the margins because of the logistic costs on imports and exports, and also on the incoming raw materials. Because many of the raw materials are procured from Gujarat, or many of the raw materials are coming through imports. So our inward freight cost and outward freight will be lesser, which will definitely improve some bit of our margins.
Okay. All right, Mr. Gupta, we'll leave it there. Thank you very much for joining us. Good speaking with you, sir. And appreciate your time here. Good luck. So, margins, keeping it at about 11% is the aim. But Mr. Gupta did say we'll aim to improve those EBITDA margins by between 0.5% to 1% or so. So, interesting chat there. Nigel.
Just one more point.